Hey everybody, it's me, Gregory Mannarino. How are you today? It's Wednesday, July 11th, 2018. You know, sometimes wishes come true. One is happening for me right now. If you recall, in the video that I did last night, my market wrap-up, I said I would like to see this market, sell off a little bit after 2 days of gains. Well, that's exactly what's going on right now, and I personally could not be happier about it. I am not in any positions right now. I closed all my longs before the market closed yesterday. I did not enter any short positions, just like I explained. Could I be making money right now? Yeah. But I don't want to, I don't know. I'm not doing it. I want to sit here, and I'm going to wait for this market to pull back, and then I'm going to buy the dip. So I am really thrilled about what's going on here as a trader, and you should be as well. Couple of other things are going on I want to cover. The dollar is flat. Bonds are getting bought up a little bit. Watch the spread. Now, I want to talk about the spread a little bit because there's a lot of confusion and there's a lot of misinformation going on here. As you all know, focus on the 10/30 spread. Why would Greg do that when the mainstream financial channels, for the most part, want you to look at the 2 to 10 spread and then compare that to the federal funds rate? Well, first of all, let me explain this to you. Again, this is classic. Look here, don't look here. Why would the mainstream financial channels, Steve Leisman especially, yesterday, we had a little talk about him, and all the other talking heads they're parading out on the mainstream channels, want you to focus on the 2 to 10. Well, maybe because they don't want you to look at the 10/30. Now, why is the 10/30 so important to this guy sitting in front of you? It's pretty simple, and if you don't believe what I'm about to tell you, just go look for yourself. Seriously. The talking heads on the mainstream financial channels and the grossly misinformed out here are trying to convince you that you should be looking at the shorter end of the curve, the 2 to 10. Now, why would they be saying that? Well, let's see. Historically, it has proven to be a pretty reliable indicator with regard to coming recessions. You and I are not even the least concerned about a coming recession. What you and I are concerned about is what this yield curve is telling us is coming down the pike. Now, if you go back again, and I talk about this all the time, the dot-com bubble and the 2008 market crash, it was the 10/30 inversion, which was the leading indicator for the market meltdown. That's why this guy here is focusing on the 10/30. So all of you out here who think you know what you're talking about, which is probably a fraction of a fraction of a fraction, and want to be led like a sheep by the mainstream financial channels, well, you keep following the 2 to 10 and look for that recession. Why don't you keep on doing that? While the rest of us who understand things maybe a little bit better will focus on, well, the leading indicator for the last two market meltdowns, which was the 10/30, period. So I hope I have cleared this up for you. I'm not looking for a recession. I don't care about a recession. Let me explain that a little bit further. Right now, household debt, sadly, is at an all-time record high and keeps getting worse. If people were not borrowing themselves into oblivion right now, well, guess what? We would be in a full-blown recession. People have lost control. They have no ability to think about what might be coming or how they're going to pay their bills. Look, we're going to end up in the same kind of a situation, much, much worse, actually, than last time. The credit bubble of 2008, well, this is the super mega credit bubble of 2018. That's where we are right now. So anyway, I hope I've clarified what's going on here. Now, let's just go back to the market real quick. This sell-off to me as a trader is a freaking godsend. They will continue to prop this up. I love this. I am loving this like you have no belief. A lot of people are sad right now because their stocks are going down. I'm sitting here, could not possibly be happier. That's the truth. And when this thing turns around, and it will, maybe later today, tomorrow, I'm going to be buying calls across the board, and I will rip this market to shreds. That's the truth. Anyway, with that said, hope this made sense to you. I hope I clarified this whole thing with the 2 to 10, 10 to 30. Yeah, sure. Follow the 2 to 10. Look for your recession. And, be strung along by the mainstream. Meanwhile, we all know, and do your own research about this, it was the 10 to 30 inversion, which was a leading indicator that let us know that there was trouble coming down the pike. And it nailed it both times. And it will again right here. All right, with that said, let's watch. Let's see what happens, people. And I will see you later.